So this is our next panel today. It's a developer download exploring the types of projects, financing, and price points South Florida can expect today and in the next cycle. So it's not a market today where we're seeing a ton of new projects being announced, but those on our panel today are pulling off an impressive feat. We have with us today some of the biggest developers moving ahead with projects in what is arguably the late stages of a market cycle. And the big question today is, where do you get the money? Where do you get the money to build? Well, one of the panelists today scored the biggest construction loan of this cycle, and another scored one of the next biggest, which is not an easy feat. They're competing against a slew of inventory, although other developers have shelved or canceled projects, which is a sign actually of discipline in this market. Speaking to the long-term growth of Miami as a global city, these developers are also planning massive neighborhood-defining projects for the next cycle as well, a few years out. And that's kind of a level of foresight and planning that would have been inconceivable in the Miami market 10 years ago. So this late part of the cycle isn't such a terrible place to be compared to 10 years ago. And I'm going to leave it to the panelists today to fill you in. They're the experts, so let me introduce them. First, we have Jules Trump on the end here, founder and CEO of the Trump Group. Jules' firm is spearheading the development of estates at Aquilina. Tower is helping further shape Sunny Isles, and he recently scored, as I mentioned, the largest condo construction loan in Miami-Dade County this past cycle, $558 million. Next, we have Michael Stern, second from the end there. He's one of South Florida's most active builders. He's done more than 12 million square feet in New York and Miami combined, and he recently scored one of the largest construction loans for Mona Terrace, which is in Miami Beach. Next, we have Birdman. And Louis is the co-developer behind 1000 Museum, designed by the late star architect Zaha Hadid. And that's been a precedent-setting project for the city in terms of design. And when I talk about Miami, the architecture and the big names that have come in to build here are always one of the first things I mention. So it's a big deal for his development firm. It's a big deal for the city. Next, we have Kieran Bowers on the end there. You may be familiar with his company's developments, a little place called Brickell City Center. It's the $1 billion mixed-use project, and prior to his work starting in Miami in 2016, he held multiple positions in development in Asia for Swire. And last, we have Moishe Manna. And last but not least, because this is his building, it's named after him. He's pioneered much of this neighborhood, amassed more than 40 acres for the trade center here, and he's bought lots of space in Flagler District, and most recently, he picked up close to 2 acres in Allapattah, so he's not content just to transform 2 neighborhoods, he's going to go to 3 now. So we'll hear more about that. So my first question is, as I talked about in the intro, where do you get the money from today? How is the lending landscape changing? Jules, you just got funding from Bank of the Ozarks. What does that look like? And also, you have some news for us today?
Well, can I address it in 3 ways? First of all, just talking about achievements of these gentlemen has been remarkable. But the achievements of the real deal in pulling together this venue for the real estate industry to get together, I just want to congratulate you and Amir and your group for an amazing achievement.
Thank you.
It's a terrific venue. So thank you for that.
Thank you.
Turning to the issue of the announcement that we have today, we're announcing that today we signed the contract with Coastal Construction to go ahead with the construction of our second tower. So where we had previously said that we're going to only do 1 building and then later on do the second building, we've now announced, based on success of sales and backlog and so on, and the availability of the finance, of course, we're going ahead with the second tower as well. And this will be the largest contract ever in South Florida for the construction of a condominium development with the amenities, of course.
Wow. So, and your main lender on the project is Bank of the Ozarks, been a very active lender in South Florida. They've seen some fluctuations in share price recently. Does that concern you at all when you see that sort of thing? And where else were you, when you're considering financing for it, what are the types of different options out there today?
Look, during the process of arranging the construction finance, we must have spoken to perhaps 20 or 30 different lenders. The number of alternate lenders is simply enormous. Their rates are pretty competitive. In the end, we negotiated with the Bank of the Ozarks for about a year. They are extremely conservative. They're not wild lenders in any way. And, we looked, they were very demanding that our sales level be high, and, the amount of security that they demand is high, and the equity in the building is high. But we felt in the end that they were by far the best lender.
Is there a situation where you think you would be, I know you're working on these big projects where you would arguably, sell the land, or is this something that, it's a 1-year timeline, 2-year timeline?
Okay.
Just trying to get more clarity on that.
Okay, to be more specific, okay, so we're not selling land, we're not flipping land, we're building, and we build something that's sustainable, that's going to have business, going to create life, that's going to create community, invest in the community, invest in the businesses, and that's basically what we're doing through our investments.
Yeah, and I didn't mention this to you, but Jules Trump is not related to Donald Trump, so
Thank God.
Don't get too worried. Michael, I have a question for you, and I think those are good to raise these points, but just maybe not in this venue today. Michael, EB5, you're planning a 10-acre project in Miami River area, a huge project. You were talking about EB5 financing. What is the status of that? Does it seem like a viable option today? There's been a lot of lawsuits recently about EB5. What's kind of your opinion?
My opinion on EB5, I think EB5 is really in the last cycle. We've never used EB5 financing, not knocking anyone who has. I think that the tides are turning now where there's enough litigation and enough issues with EB5. The Wheel project in New York, which was a massive project, just announced its death, even though we all knew it was dead for a long time. I think there are a lot of issues around some of the procurers of EB5, and I think that wave of litigation is really just starting. I think that slowly but surely, I think it'll actually happen quickly now that the Treasury regulations are out. I think opportunity zone financing is going to replace EB5 as the vehicle of choice for real estate equity very soon. I think now that the guidance has been issued, you're going to really start to see people dip their toe in the water, and opportunity zones are where it's going.
Is that something that seems like a viable option for any of you guys as far as opportunity zones? Are you in any of those areas?
We have some property in opportunity zones. One of our downtown Brooklyn developments is in an opportunity zone, and that has about a $750 million capitalization. So it's ripe for an opportunity zone investment. I think you have a lot of people buzzing about it and talking about it, but there hasn't been a single investment done because there was too much ambiguity in the way the statutes were written. Some of that clarity just came out a couple of days ago. I think there's going to be another round of guidelines that are going to come out, and I think that you'll really see a wave of that investment coming.
How about concerns about inventory in the market now? We're in the later stages. Jules, this is something we talked about in Sunny Isles. Michael, we talked about this a little bit in Miami Beach. What are you up against, and why move forward with the project now, considering it's a little later stage in the cycle and there is a little bit more inventory?
Look, we're moving ahead on this project based on our own demand. I mean, our demand is based on 4 things. We sell the world's finest residences. We give an incredible lifestyle with great amenities and services. We give great value. And there's a high degree of trust because people come, they can experience the hotel the customer can see firsthand what it is we're delivering. So therefore, there's a high degree of trust. So we're doing it not based on what there is in terms of resales. If I turn to the resale side of it, there was a recent article that spoke about the number of resales in the Sunny Isles market. And they spoke about, I think, 105 potential resales. Well, the absorption between, there are 3 or 4 major developers in Sunny Isles. The absorption over the last several years has been at the rate of over 200 a year. So to say there's 100 resales at high prices, nearly all of which are new residences, it's not, I wouldn't say a drop in the bucket, but it's certainly not a worrying number when you think back to the years when there were overhangs of 23,000 and so on. The resale market really doesn't worry us. The new product is what appeals to customers because it's better amenitized, newer fashion, and so on. So the two function to some extent independently of each other.
Michael, how about in Miami Beach?
So I disagree with the premise that there's a lot of inventory, particularly in Miami Beach. I mean, I think you need to go neighborhood by neighborhood. I think that might be true of certain downtown areas and other zones. We're the only large-scale condominium being built in South Beach right now. And I think that that vacuum of product is an opportunity in itself. So we're very excited to go deliver product and have finished product when the market's ready to buy it, when the market comes back. I think you're going to see a couple-of-year void because of the credit crunch and because there haven't been new starts where there's just not enough inventories. I think that the inventory oversupply is a myth.
And obviously, right, you do have to go neighborhood by neighborhood, and Miami Beach is different than downtown Miami. Where do you guys think we are at if you had to say, when this cycle ends and when the next cycle begins? And like I mentioned at the beginning, it's much more fluid than it was in the past, where you guys are planning projects for the next cycle that never would have happened before. But when do you think people start building en masse again?
Well, I'll just say that I think the goal should be to make South Florida as a market less of a cycle, less of a roller coaster. And the way we do that is don't over leverage, don't do ill-conceived projects, and try to avoid that crash that has created instability in the market historically. And Moishe was starting to reference that. Let's get away from such a cyclical business and have a market that's a little more mature, like in New York or like some of the coastal cities, and try to avoid the big rises and dips.
Yeah. And Louis, where are you now in sales at 1000 Museum?
Well,
and
again, I don't really think there's an oversupply of inventory in the downtown market either. There's a lot of projects that still continue to be marketed for years now that still haven't come out of the ground. Very little came out of the ground in 2018. I don't think you're going to see very much come out of the ground in 2019. So, which is a good thing. I mean, inventories are getting absorbed, and if you look at different segments of the market, I mean, obviously we're at the highest end of the market, and we're selling at prices that are an anomaly to what's normally being sold in the downtown market. So there's not a lot. There's next to no inventory in that price range, and I think that as lenders look at these projects that people are planning, and they do have on projects that haven't come out of the ground pretty high bars for sales thresholds before these things get in the ground. I think you're going to see less projects go in the ground, all through 19.
One big thing coming up, obviously, is the second phase of Brickell City Center. And Kieran, can you talk about that second phase? And obviously, you're still selling units from phase 1. How is phase 2 going to be different, and what are you planning there?
Well, there's 2 phases. One, of course, which we're working on at the moment, which will be in the northwest corner of Brickell City Centre, and we're currently planning to go before the City Commission for that. That'll be a combination of a retail podium, and condominiums on top. But in terms of land and approvals that we currently have in hand, which is the phase 1 or phase 2 of Brickell City Centre, but we call it 1 Brickell City Centre, which fronts onto Brickell Avenue. Effectively, that's 1.5 million square feet, Brickell City Centre, but vertically stacked rather than spread across 3 city blocks. Mixed use, has the usual kind of retail, office, a hotel portion, and condominiums on top.
And what was the decision, because you also partnered with Carlos Matos on a site that's adjacent to the city center site. So in effect, you're doubling down and increasing your bet. What was kind of the thinking there? Is it like you are eliminating the competition by buying them out because it's going to be competition if it goes up separate from you guys, or how did you kind of make that business decision?
Yeah, I'd say it's a risk-assessed investment rather than a bet. But I think, you know, when you look at Brickell City Centre, the bit that's missing is that sort of northwest quadrant. And again, we look at the master plan as being an interconnected mixed-use concept. And that's probably the one piece where I think you can really effectively and economically, sustainably connect some retail or add retail, as well as residential. And that way it'll flow with bridges across into the main part of the center. So it's really, it's a fairly obvious piece of land if you look on the map, and then working towards the river, which is another site that we both have an interest in.
And what's a healthy level of sales these days for any of you guys? You know, with Reach and Rise, do you expect to sell 1% of inventory a month, or you know, X number of units? How do you look at what are you seeing, and what do you think's a decent expectation these days?
I mean, look, the market has definitely slowed, and you know, we're now selling, I would say, between 5 to 10 units a month. It's a challenging market. I think what we've seen is that demand from South American buyer has tapered. Again, I concur with a lot of fellow participants here that we don't really see an inventory issue as such. I think on MLS now you're looking at about 2 years worth of supply. It's not great. It should be around a 12-month level. But the interesting part there is that I don't think you're seeing really heavy discounting on MLS either. And you know, if you split the primary market into pre-construction and post-construction, again, there's not a huge amount of inventory out there either. So yes, the market has slowed. Dollar strength is a big issue. Some of the issues happening obviously in the South American continent. But you know, we're reasonably comfortable at holding on. We don't see a massive slash of prices going on that worries us. Yeah,
Michael, Lewis, or Jules, what are you seeing these days as far as sales per month and selling off inventory? Are you seeing 1% a month of your inventory getting sold off, or how does it kind of work?
Well, we sell much more than 1% per month of the inventory. But if I may go back to something you were talking about earlier, in terms of prices and where do we see this all going, I concur with the fellow, with the gentleman who've spoken just before me on the issue. There's a tremendous shortage of land. You know, for instance, you talk about the area on the beach. There's virtually nothing on the beach. There's a couple of large developable sites left in Sunny Isles, but it's really down to less than a handful of sites left. There are no new projects being announced other than what we announced this morning. And so we see the prospect for pricing going up significantly. Cost of building obviously is getting higher and higher. We see it in our own contract and so on. So we see the prospect of higher prices continuing. So there's definitely going to be a scarcity of product within the next couple of years.
And how about the buyer pool? I'm interested in, you know, you're hearing a lot about more from the Northeast, less from South America. If you had $100 or 100% of your marketing budget, where would you allocate it today?
The Northeast. You know, it's an interesting statistic. For somebody in the $5 million a year income bracket, who's somewhat typical of our customer, if they live in the Northeast, their take-home after tax is $2.5 million. If they live in Florida, it's $3.2 million. So it's a huge discrepancy. And, you know, we've got the weather, we've got the best of the New York restaurants here, we've got everything else here. It's a huge incentive, and that's why you're getting the huge influx from the Northeast. That's where we put our dollars.
Yeah. Lewis, how about your marketing dollars? Where would they go?
We're definitely seeing a shift to more sales coming from domestic markets. We continue to still make sales out of South America, although to a lesser degree. You know, if you look historically here, you would say, especially in the Miami market, you know, going back a number of years, that probably 75% of the business came out of Latin America. I think that number is getting probably closer to less than half, and you're starting to see business come from other markets. And our more recent sales that we've made have been made domestically, although we still see a lot of interest out of Mexico. We still see a lot of interest out of you know, Brazil, but you know, they're just all dealing with currency issues, and until they get elections settled and things like that, I don't think you're going to see any change in that.
And what do you think the long-term implications are for the market now that more Latin American buyers have disappeared and you don't have many of the 50% deposits? Do you think that's gone for good, or that's going to come back in a later stage? Or
I mean, I think that the amount of deposit, the percentage of deposit that developers are taking is less. I mean, it's very hard to get, you know, 50, 60% deposit today. That, you know, the markets just shift because the domestic buyer is not that type of buyer. They're not going to put 50, 60% down and wait years. You know,
maybe if you have a news cycle, at least it's easier to reintroduce the idea, perhaps.
It'll depend on where the buyers are coming from at
Yeah,
that time.
yeah.
You know?
We are finding, we've always insisted on the 45% deposit, and we're continuing to get it. We're not, and maybe the market will become educated to continue putting up the 45%.
Let's talk about some of the new areas you guys are going into. Moishe, you're buying an Alapata now. What is kind of the thinking there? How does it jibe with some of your other investments in Wynwood and Flagler, and what do you see there that compared to the other markets?
Okay, Alapata is a long range because part of our trade hub that we're going to be building, and the Alapata, I was really debating what we're going to be building over there, but it could be the wholesale market that we want to bring into.
Moishe, can you put your microphone a little closer?
Hello.
Yeah.
So it could that we've been debating what we want to do with it, but it's something that be connected to the global trade hub that we hoping to build, and it could be like I designated it to be the wholesale food market because they have in Alapata some. I mean, they have a place right now, but it's very dilapidated, and I wanted to build it in a good way where it's going to be making trades available.
And how about opportunity zones? We touched on that earlier, but it seems like some of your properties are in prime position for that as far as getting tax breaks that are supposed to spur development. Is that something on your radar that you've looked into so far? And obviously it's still coming out from federal guidelines and that sort of thing, but does it seem interesting?
Of course it's very interesting. So we can redeploy money from different places and put it in the project, and this is something that can really help. I think going to help many people also, help them make decisions when they and it's going to create a demand for that kind of areas to come and build and create jobs and opportunities for everybody.
Lewis, let's talk about one of your projects, or project to be that didn't happen. You had a site in Hallandale that you were planning to develop on, ended up selling it. What was kind of the business decision there? Was it a market-related thing? Did somebody come
It was
in?
more market-related, and you know, and also you know, the partners in that deal had some, you know, different opinions about timing and which way to go. You know, we spent about 2 years or so entitling that project, and it was a piece of property that, you know, had no entitlements on it, so it was a real uphill battle. And we got all the entitlements, but then the market changed. So, and we just didn't feel it was the right time to develop the property.
What sort of numbers did you run? What sort of, you know, comps made you pause?
There was a heavy component of condo hotel and condominium, and we just felt that the market wasn't there to take on. That project was 1,200 plus units that were approved. So, I mean, the current owners, I think, are looking at maybe scaling the project back, and we just didn't see the economics there.
You know, Stuart, when you talk about new markets, there are many brokers in this audience. And for them, many of the brokers in Dade County never venture into Sunny Isles. And I really think Sunny Isles is one of the best kept secrets around. It's grown like Topsy. It today has a greater market value than Aventura in a relatively short period. And the opportunity for the brokerage community in Sunny Isles in general, we believe in Aquilina in particular, but it's an incredible opportunity to earn enormous amount of commission. So I would encourage you to look at it as a new market that's evolving.
Speaking of commissions, what kind of commissions are you guys offering today? Any special carrots for brokers, or is the market not saturated enough to raise commission levels higher? Where are you kind of at with that?
We haven't raised our commission level. We believe we make it really easy for brokers to sell at our properties because the customer can experience the lifestyle. They come in, they see the way people live, they meet with other residents, they see the quality of the building. So we've not found it necessary to increase commission levels.
Michael, how about you?
I think they've been pretty stable. I think you saw them rise across the board a couple of years ago at the beginning of this cycle, and they've stayed pretty steady since then. I don't think that you'll see more volume by incentivizing the brokers more. The agents here already have a great deal. The commissions are higher, and they get some of it up front compared to New York. It always boggled my mind that more New York brokers didn't try to build their businesses up here more because, as I said, it's a higher rate and they get some money early, as opposed to, say, new development in New York, where all the money is escrowed and you can wait 3 or 4 years to get paid. The brokers can get paid right now.
And what specific numbers are we talking about as far as percentages?
I think it varies. I think the average is probably between the on-site and off-site. You're probably at 7%, approximately.
Kieran, is that what you're seeing at Reach and Rise?
Yeah, I think 6 to 8% is really where the mark is. Yeah, for downtown.
I don't want the brokers out there to shop around, but Lewis, is that consistent with what?
We're in the same range. I mean, it's consistent between what we pay in-house and outside. I mean, over time, I think we've paid a bit more up front than we did earlier on in the project. But I don't think that's a big driver. I think the driver is more sort of the price point. It's a big absolute commission. I mean, most of our commissions are 200,000, 300,000. You know, they're big numbers. So rather than having to sell 5 or 6 or 7 units to make the same commission, you know, they're doing it with a single sale.
You also have a project in Overtown. Is that same commission levels there?
No, that's a commercial type project. That's something different.
Got it. So in terms of planning for the next cycle, how much work are you doing? I mean, you have your existing projects, Jules and Kieran, that are going to span several years to get completed. How much shopping around are you doing for land these days? And are there any changes in land prices that you're noticing that would make sense? Any sort of decreases that would make them a bargain today?
No, we're not seeing any softening of land prices. To be honest, they're pretty full figures, and we don't see any change at the moment. You know, they're averaging anywhere between sort of 800 to 1,200 per square foot. So.
Is that what you're seeing as well in Sunny Isle? Obviously, there's not a lot of...
Yes, in Sunny Isles, there's absolutely nothing to be bought. What land there is in the hands of very strong developers, and you know, plus our own, and so there's absolutely nothing to be bought. And we only look for prime beachfront properties, and you know, Sunny Isles is the last place that you can get anything in Dade County at all. So we're not shopping around. I think it's you know, we have a great project to go, and we still have almost $1 billion of sales to go, and so it's a great opportunity for us. So
we're pushing on it.
Does that keep you up at night that you have $1 billion to sell, or does that make you happy that you're gonna basically make have $1 billion in sales?
I look at the opportunity, and it's an enormous opportunity. I'm very happy about it.
That is a very big opportunity. Moishe, when you're talking about Wynwood or Flagler or Allapattah, you're such an aggressive buyer of land. At what point do the values get high enough, partly because you've helped create the values go higher, where you stop buying or stop being an aggressive acquirer of land?
Well, at this stage, we more or less almost concluded everything we needed to buy, because we're approaching it a bit different. We're approaching real estate and building communities different, because the reason we bought so much mass of property is because we want to bring the businesses into these communities, live, work, play. And the idea is downtown to build 4,000, 5,000, 6,000 units that we're going to bring these businesses, these startups, to live there and work there. And they're going to be able to walk to the place of work, because they do not need, we do not need anymore to go to the factories, because we have no factories here. We do not need to go to the office, because we got our cell phone. This is our file cabinets. So the office business is going to change. The living, the way we live is going to change. So our product is really more directed to where the millenniums and how we're going to be able to bring them and have them put businesses in. Mm-hmm. And part of the project, really, 20% from our investment going to be putting in the community, putting in the businesses, if it's a high tech, or it's a restaurant, or it's fashion or arts. So it's a more sustainable kind of business. It's not different. It's different than the business model we have here. Mm-hmm. And we need condos, we need the luxury, we need everything, but we need also to address the issues of those who don't have the money, or those companies who want to come and operate with the cost in mind. So this is what we are really addressing in order to bring businesses to Miami.
And what price points do you think are feasible for residences in these neighborhoods?
It's already ready. It's just like we are now actually on the road to go raise money, to make all this project happen. Mm-hmm. And definitely it's ready today. Miami is ready to bring new innovations, technologies, businesses. Miami is ready. It's just like, you need the initiative to bring these businesses and build the facilities for these businesses to come and bring the people to live. Miami needs ecosystems. Wynwood is an ecosystem. We look at Wynwood as an ecosystem. It's an ecosystem where you can trade business to facilitate the trade of the Far East, South America, and also a cultural hub that we intend to build. That's why we went and we put all this massive amount of land, a massive amount of properties, that we can able to build an ecosystem and not to have businesses, industries spread out in different areas. So it's more about providing physical for the digital. It's a kind of a new kind of, we're reaching a point where things going to be different, the way we live, the way we work, the way we go out. So basically, it's a cutting-edge project that's based on memberships and so forth, but we can expand to anybody later, so not now.
And it's amazing that Miami has neighborhoods that didn't exist, in any way, shape, or form the same way 10 years prior. So are you talking with lenders now? Is it that far along that you're...
Of course. We're being now talking with lenders and talking with investors. There's good excitement, a lot of excitement. Mm-hmm. The idea is to bring $1 billion worth of investment into these neighborhoods and to start the project, and also potentially to do other locations. But for now, we need to concentrate about Miami. I care for Miami for now. I care for this project. We do the same thing in Jersey City. We assembled 2 million square feet of abandoned warehouses. And today it's become the biggest art center in America, where people work, create, sell, legacy libraries, museums. Sorry. So we got the whole functioning community over there. And we got the fashion community coming in there, startup fashions that for people to come and, and actually there's famous designers who are building the facilities within the Mana ecosystem. Eventually, we're going to have the technology. We're going to build 5,000 units over there. But what it did, it really affected the whole neighborhood in Jersey City, and it created a mecca for arts.
That's great. So we're going to take a question from the audience. You can ask about Wynwood or anything else. Want to step up to the mic? Anybody has a question or two? I see somebody walking up there now. Oh, they're leaving. So my last question is, do you think you'll see any distress in the market as we exit the end of this cycle and come to the next one, or do you think there's going to be a relatively smooth road from the end of this cycle to the next one?
Can I answer? Look, I see the buildings that are being done are in the hands of very strong developers, well-financed, and the buyers who've bought have put up very, very significant deposits. So, you know, I know in our case it's 45%. I'm hearing other numbers, 50, 60%. So, you know, I certainly don't see room for significant depressed prices.
Anybody else?
No, I mean, I agree with Jules. I think the buyer today, if the deposit is 40% or 50%, which is also what we're maintaining in Brickell City Centre, you know, some of that deposit may have been funded through a hard loan, particularly for the South American buyer, with a view to that being paid off in a very short space of time. But there's quite a bit of skin in the game from the buyer in this cycle, and I think they're unlikely to want to take a haircut on that for a distress sale. I mean, there'll be examples, as there is in any stage of a market, but we don't foresee a huge sort of distress sell-off.
My last question
allow me
sorry.
Go ahead. About the cycles and so forth, because I think we're going to have a problem, you know, due to the increasing interest rate that we have, and we're getting to some kind of an end, because I see it, and it's all function of a global market. And when we have a problem in New York, we're going to have a problem in Miami. We're going to have a problem everywhere. It's like the mad cow disease. Because one cow is sick, the rest of the cows you have to kill. So I think we're going to have some problems within the next, couple of years. Hopefully we can get over it. But because the prices went because of the low interest rate very high, the prices went very high. It was function of interest rate. The neighborhoods being vacated from New York, they're getting all the cool stores out of the place and putting AAA tenant. So I see like a big problem there in New York, and I think the problem is going to be, we're going to have the ripple effect in Miami. If it doesn't matter if it's real estate, if it is an office or a house, it's all part of a whole one problem.
Yes.
First, we don't sell to mad cows, but but as far as Miami's concerned, I do think it's a rather special case in that you've got the influx of people from the areas that you talk about coming into Miami. You've got the huge incentive to people to coming into Miami. And what we're seeing in our own buildings, for instance, in the mansions, the building we completed last, those, the average selling price was 5.4 million. The average resale listing price today is 7.2 million. So certainly not a sign of distress selling.
Kieran, my last question is for you. You also have a $1 billion project. Does that keep you up at night, or are you something that excites you and is a challenge? Or are you a glass half full guy or a glass half empty guy?
No, I mean, all our projects are large scale, so it sounds like a big lump capital sum, but it's kind of what we do in China is what we do in Hong Kong. So, yeah, I mean, the asset needs some time to stabilize the office component. And this is the beauty of the mixed use, right? It's a sort of microeconomy within itself. The office component was 100% leased to some great covenants. The retail is now 90% leased and 84% open. The residential, as I say, one building is 94% sold, the other is 58%. So, and the hotel is functioning very well. So, no, not really, not at this stage.
Okay, great. Well, I think that is all the time we have.
We have some questions out here. Is that okay?
Oh. Let's do one question. Just one question.
You want to rock, paper, scissors for it? Or?
Okay.
Okay, so very quickly, I guess this question is really focused on Kieran because the other gentlemen who are developing high-rise residential are really selling, not that yours are not incredible projects, but theirs are kind of more of a luxury brand product. So what percentage of the buyers are investors and hoping for a yield on their unit that will ultimately be a rental unit? And with South America falling back as investors, are you finding it harder to justify those lower yields for, let's say, a domestic buyer?
So to answer the first part of the question, I think we're seeing about 70% of our buyers are the investor category. So this is a repeat of what we saw initially in the buildings in Brickell Key as well. But if you look at the dynamics of that market now, I would say it's probably 80% owner-occupied and 20% investor. So we think that trend will follow through to what we have in Brickell City Centre itself. And sorry, the second part of your question was?
Just the nature of the buyer who's expecting a certain yield on their investment. When it was a South American whose grandfather used to be happy with money in a safety deposit box, a low yield was acceptable. But to a domestic buyer buying investment grade condos from you wants a certain yield. And is that yield satisfactory to them today, especially with the increase in interest rates?
Appears to be. I mean, yields generally are around the 2 to 3% mark, so they're quite low. I mean, does it represent a sound investment? I mean, I'll leave that to the broker community to establish. I mean, I personally believe it is. It's a great location, and as I say, we're not seeing any depression on pricing. But you know, the yields generally in the city of Miami are low. There is a lot of rental inventory out there, particularly in the downtown market. So there is compression on the rental yields at the moment. And I think that will happen probably for the next 18 months or so. But I still foresee it as being a sound investment if you're looking for return on your capital at the end of the day.
Great. Well, I want to thank our panelists. I want to thank the audience. And we have another panel coming up shortly. Thank you.